If you sell your Bitcoin right now, you are going to be you're going to have such kind of regret. You're going to have sort of generational, on your deathbed regret of having sold your Bitcoin in 2024. Because honestly, I think the future could not be brighter right now. And really, it's all about this ETF, Wall Street adoption, big money, and money printing, which is 100% coming.
Mathematician and Wall Street veteran Fred Krueger recently revealed a strong outlook on Bitcoin. Despite recent price corrections, he believes selling Bitcoin in 2024 would be a bad move. Let's see why he thinks holding on is the smarter option. In his recent video, Krueger mentions that the recent selling was driven by extreme bearish sentiment, with people on crypto Twitter becoming overly pessimistic about Bitcoin's future. They feared that Bitcoin would drop significantly in value. Krueger believes that this extremely bearish narrative is wrong. People should stop thinking that Bitcoin will continue falling and everything will fall apart. Contrary to the pessimistic outlooks, Krueger believes that large-scale investors and institutions will enter the Bitcoin market, bringing massive financial power that dwarfs the current level of participation. With that being said, let's take a look at Fred Krueger's video update. Please take a moment to show your support by liking the video and subscribing to the channel. Thanks, and enjoy the video.
We're back above 62,000, and the future is so bright, I just got to wear shades. I feel like this last bout of selling was absolute sort of peak bearishness. Somebody said Bitcoin Twitter, crypto Twitter is starting to turn into cannibalism, and I kind of believe it. I got my friend Josh who's like, if it goes to 50,000, then it can go to 40,000, then go to 30,000, then it can go to 20,000. People are just getting so bearish. They're just start looking everything on the dark side. Mt. Gox, they're going to sell. Jim Bianco, the ETF's never going to work. The miners are just going to sell relentlessly. So we just got this full bearish narrative that's come by. And really, I just want to talk a little bit about what everybody's completely forgotten, which is the ETF. This was the thing. Honestly, we've waited 10 years for this ETF. We get it. We have 3 months of rallying around this story, and then just a little bit of indecision. Then everybody's sitting there going, the ETF's not going to work. It's not a big deal. Wall Street's not going to buy. Only the degen retail traders are going to buy and not the rest of the traders. I think that's just completely wrong. I think the big money is coming. The big money is so big relative to the size of this first generation of participants. It's 10x to 100x as big. Just the idea that somebody like Michael Dell could be buying Bitcoin that's putting out Bitcoin memes is so significant. And, it's just a reminder, that hasn't stopped, okay? It hasn't stopped. And I kind of agree with Samson Mow, who said, if you sell your Bitcoin right now, you are going to be you're going to have such kind of regret. You're going to have sort of generational, on your deathbed regret of having sold your Bitcoin in 2024. Because honestly, I think the future could not be brighter right now. And really, it's all about this ETF, Wall Street adoption, big money, and money printing, which is 100% coming. It's coming in big time, whether Trump gets in or Biden gets in. We're going to be printing money. And, I think we're seeing also, AI is going to take over the world, but is the play NVIDIA? Well, if you bought in 4 days ago, like Cathie Woods, you're down 15%. So, not quite as simple as you think. So anyways, I think Bitcoin, the story is amazing. And again, let's not forget about the ETF.
In other news, an article on Crypto Potato provides a market update that focuses on the recent price movements of Bitcoin and several altcoins. Bitcoin's price rose above $62,000, but failed to sustain this level and has since fallen back below $62,000. The week began with Bitcoin at over $64,000 after a stable weekend. However, a significant price drop soon followed, driving Bitcoin down to $58,400, a low not seen in almost 2 months. Bulls intervened at this point, pushing Bitcoin back up to reclaim the 60,000 mark and reaching over 62,000 on Wednesday. Despite facing resistance and falling back to 61,500, Bitcoin's market cap remains above $1.2 trillion, though its dominance over altcoins is below 50.5%. Also, several altcoins have outperformed Bitcoin, notably Solana, Avalanche, and Polkadot. Solana's price surged due to VanEck filing to launch the first Solana ETF in the US, reaching $150 before slightly retracing, but still up by 7% on the day. Avalanche saw a 9% increase, bringing its price above $28, while Polkadot rose by 8%, now well over $6. Most larger cap altcoins are also in the green, with a few exceptions, like FET and TRX, which are in the red. The crypto market cap increased overnight by about $40 billion overnight, now above $2.4 trillion, according to CoinGecko. Here are more clips of Fred Krueger as he addresses how the number of daily active users doesn't determine the performance of a cryptocurrency.
Bitcoin's just above 61,000, and I want to focus just a little bit on daily active users and why I don't think that matters. So I'm in this Telegram chat with a bunch of whales and OGs, and they're all talking about Ton, which is the Telegram token, and they're like, wow, Telegram has millions of daily active users, and they're using these games on Telegram, and wow, we should all buy Ton, and Pantera is throwing money into Ton. And at the same time, you have people like Invest Answers who are saying, wow, Solana's got these millions of daily active users. And, Bitcoin's really just a bunch of kind of very inactive people just sitting on Bitcoin in their wallet. So, it's really not active users. It's not, it's not relevant. So I just think this is the wrong way to think of this. I understand this is how a VC would think of things. They always look at, okay, what's your active number of users? What kind of user base you have, and then after that, they're like, how much money are you making off of each user? And there's definitely a bunch of people who are looking at that, and they're looking at like Ethereum as a model of, okay, you got so many active users, you're charging them fees, you're taking that fees, you're buying back your own token, and that's how you're going to get value. I don't think that's really the right model here. I think the right model is, which version of money are you going to trust with your savings? And, if you're trusting money with your savings, you don't really care if people are using that money to play pachinko type games or, arcade type games where you put the quarter in the slot and then it displaces some other quarters, and maybe one will fall into the, a couple will fall into the slot and you'll make your money back. No, that's just not relevant. That's kind of casino gambling. That's just degen play. It doesn't matter. What really matters is which is the kind of the final form of money. And I think that's Bitcoin, right? And so I'm seeing it a lot these days for some reason. And, I saw it with this Jim Bianco thing, which I actually liked a lot, the Jim Bianco, James Van Straten interview. But at the end of the day, Bianco is sort of saying, well, Bitcoin's not really this alternative financial system. It's not, people aren't embracing these non-custodial wallets. Look, it doesn't matter, because at the end of the day, if you're just buying Bitcoin and holding it, it doesn't matter if you're holding it in the custodial wallet a non-custodial wallet, an exchange, or an ETF. It just matters that you're holding it. That's what matters. So if you're choosing to put your savings in Bitcoin, more and more people are coming to that conclusion, then the price of Bitcoin will go up. I don't really hear a lot of people saying, I need to put my savings in Telegram token. I haven't heard that. I haven't really even heard people saying, I want to put my savings into Solana. It's more like this VC bet. I want to get in. I want to get my money. I want to get out. So I just don't. To me, this is noise. Daily active users are noise at this point. Web3 is complete noise, and that's kind of where I am on these DAUs. Catch you guys soon.
Krueger argues that focusing on DUs is misguided when applied to Bitcoin. Instead of being an asset measured by its daily use, Bitcoin should be viewed as a store of value and a place where people trust to put their savings. This is different from tokens used for frequent transactions or games. He also notes that while Ethereum might follow a model where user fees drive value, Bitcoin's value comes from its role as a trusted form of money. He criticizes the notion that Bitcoin needs high DAUs to be valuable. Finally, Krueger concludes that DAUs are not a meaningful metric for Bitcoin's success. The real measure is the increasing number of people who choose to save their money in Bitcoin, which will drive its value up over time. Now guys, if you're watching this video, you're clearly interested in crypto. If you want to stay up to date on crypto and Bitcoin, subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top-on-chain analysis all in a nutshell. Click the first link in the description to join over 60,000 others and become a better crypto investor. Anyway guys, that's all for today's video. I hope it brought you some value. I'll see you all in the next one, and as always, all the best.